Again, you can see how gold is sort of running out of the system. It's going to lead to a situation where gold's value in its own right, and I'm not talking about measuring it in dollars or euros or anything, gold's value in its own right looks set to rise. And that is going to accelerate the dollar crisis, in my view. As far as the Bank of China is concerned, they're not in there buying gold. They're getting rid of dollars. Yeah. I mean, they know these guys aren't idiots. They can see what's going on. They can see that America is in a debt trap. They can see exactly what's happening. So they just want to basically get rid of dollars.
Chinese banks caution retail investors as gold prices surge and demand for the precious metal grows. 6 major banks have raised the investment thresholds for their gold savings accounts to warn investors about potential risks. According to sources familiar with the situation, several Chinese banks have also received new gold import quotas from the central bank. These quotas, granted in August after a 2-month hiatus, are part of the People's Bank of China's efforts to manage the amount of bullion entering the country, the world's largest consumer of gold. Alasdair Macleod, a respected economist and expert on monetary economics and precious metals, has highlighted the implications of this trend. He explains that Chinese gold savings accounts are denominated in gold, creating a liability for banks to purchase physical gold to back these accounts. The limited capacity to back these accounts with paper gold, such as ETFs or futures contracts, has heightened the demand for physical gold, further straining supply. The recent surge in demand for paper gold assets, such as ETFs and futures contracts, has further fueled China's gold frenzy. Although this type of demand constitutes a smaller share in China compared to Western markets, the substantial inflows into Chinese-based ETFs more than offset the outflows from North American ETFs during the February-April price rally. Analysts have noted that robust Chinese buying was a significant factor in the gold market's rally during March and April. If demand picks up again, it could drive prices even higher. Macleod also points out that the Chinese government, keenly aware of the US debt challenges, is strategically reducing its holdings of US dollars rather than directly accumulating gold. This move reflects China's understanding of the global financial landscape and its potential impact on the value of its reserves. China's central bank holds $3 trillion in reserve assets, only 5% of which is currently in gold, and can significantly influence global markets. Please tune in for our exploration of Alasdair Macleod's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
The value of the gold broadly remains the same. It's the value of the paper currency which is declining. And I think that's the important thing.
Yeah.
Having said that, when you get a flood of people going out of the paper currency into gold, then the value of gold in terms of its purchasing power, measured against particularly commodities, for example, that will tend to rise. So pure supply and demand. And I think, this is something which I don't think has been fully appreciated in bullion markets. If you look at China, household savings run at around about 35% of GDP. That's $6 trillion. $6 trillion every year, no longer going into property, not really attracted into the stock market. It's just going into deposits on banks' balance sheets. Now, banks also, by law in China, have to, or regulation probably rather than law, have to offer gold accounts. This comes back to the whole of the gold thing. The Chinese government are preparing their population for this. And these gold accounts, basically, if you've got 500 yuan, maybe 600 yuan, you can open a gold account. So less than $100 equivalent, you open a gold account, and that account is denominated in gold. It's basically an unallocated account, as I see it, but what it does is it leaves the liability with the bank with a gold liability. So what does it do? It has to go out and buy gold in the market in order to have it. The idea that you can back these customer accounts with paper gold, is actually severely limited. And this is what's now happening. This is the drain of gold coming out of our markets is actually increasing. One of the things I monitor is the withdrawals from COMEX. And every day, pretty much, there's significant withdrawals coming out of COMEX. And we're talking about, not small quantities. Over a month, it can be 250 tons, for example. And then there is the other side, which you can't immediately see, the exchange for physical. Now, what an exchange for physical is, it's an exchange of a COMEX contract for a London forward. So why would you exchange a COMEX contract for a London forward? Well, the answer is that you sell your COMEX contract, you buy your London forward position, and then you take delivery. So here again, you can see how, gold is sort of running out of the system. It's going to lead to a situation where gold's value in its own right, and I'm not talking about measuring it in dollars or euros or anything, gold's value in its own right looks set to rise. And that is going to accelerate the dollar crisis, in my view. I think I made this point on your show before, and that is that as far as the Bank of China is concerned, they're not in there buying gold. They're getting rid of dollars. Yeah. I mean, they know these guys aren't idiots. They can see what's going on. They can see that America is in a debt trap. They can see exactly what's happening. So they just want to basically get rid of dollars.
Alasdair Macleod suggests that we're witnessing not merely currency fluctuations, but empire's broader rise and fall. Historically, international currencies were primarily backed by gold until the Bretton Woods Agreement. The US dollar, however, stands out as the first primary currency to endure for decades without being anchored to a tangible asset like gold, making it a unique phenomenon in the history of global finance. During periods of high inflation, investors typically flock to gold, recognizing its inherent value and limited supply as a hedge against declining currency values. Gold's inability to be diluted makes it an attractive store of value, particularly during economic instability. A prime example of this occurred in April 2011, when fears of declining fiat currency values drove the price of gold to an unprecedented $1,500 per ounce. This surge reflected a widespread lack of confidence in global currencies and a bleak outlook for economic stability. Macleod suggests that the euro could potentially return to a gold standard, requiring strict control over government spending. The US experienced similar challenges during the Bretton Woods era, leading President Nixon to end the direct convertibility of US dollars into gold in 1971. This marked the beginning of the fiat money era, fundamentally changing the landscape of international finance. Let's get back to the interview.
And that is that it's really what you're looking at is the rise and decline of empires rather than currency. Because until Bretton Woods, basically currencies, international currencies were backed by gold to a greater or lesser degree. So really, this is, with the Americans' dollar, this is the first time you've had a currency lasting for decades without any anchor in terms of value on an international basis. Okay, so this is very, very different. I think that from China's point of view, it makes no sense at all to take on that mantle. In other words, the next fiat currency, if you like, which the world uses. I mean, I don't know what their thinking is, but I would, if I was asked by the Chinese what my view is, I would say, put it on a proper gold standard. Then it really doesn't matter, because the future of your currency in terms of how it's used and all the rest of it will come and go with your influence around the world, not with the management of your currency, which is really where America has gone horribly wrong. And this is why I think China has accumulated a lot more gold in secret than publicly declared as reserves on the People's Bank's balance sheet. They've been doing this since 1983, when legislation was put in place for the People's Bank of China to operate in markets, acquiring gold and silver on behalf of the nation, the state, the Communist Party, whatever. And ever since then, they stepped up their mining output and rapidly became the world's number one gold miner by output, stepped up the refining, which they kept very much under state control, and banned effectively any exports of gold. So it's all been accumulating. I mean, I say it's sort of China's Hotel California for gold. You go in, but you can't get out. The faith and credit in the US dollar, in the euro, and all. I mean, the euro could put itself on a gold standard because some of the major countries actually do have substantial reserves. But they wouldn't be able to do the other thing, and that is contain the spending, because you can't go on a gold standard without containing government spending. I mean, where the Americans went wrong, if you like, leading up to the collapse of the Bretton Woods system, was, that gold sort of meant that prices did not rise that much in the post-war years. But the expense of that in terms of growth of GDP, because the growth in GDP, it multiplied something like 6 times over that period. The growth in GDP basically meant that the other side of the price stability was the gold reserves were running out. You can't inflate your credit without an effect on prices. Now, if the prices are anchored to gold, then what happens is the gold disappears. It's actually as simple as that. And that's basically what America did. So you must contain spending. And the other thing you must do is to encourage saving, which means changing your tax policy for savers.
The rise in demand for gold, especially in times of economic uncertainty, underscores its enduring role as a safeguard against inflation and currency devaluation. Meanwhile, China's strategic financial moves and the ongoing debate over a return to the gold standard highlight the complexities of maintaining stability in a rapidly changing world. Could a return to a gold-backed system offer the stability modern economies increasingly seek? Or have we moved beyond the need for such a standard? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.